The next we'll look at is the accidental death and dismemberment option. Because it's very inexpensive, almost all group insurance contracts include some AD&D benefit. And this AD&D benefit is going to look very similar to the AD&D benefit that you saw back in Module 10. Under a group AD&D benefit, if you're killed or dismembered, that is a loss of a limb or the loss of a use of a limb or a body part in some accident, and keep in mind it has to be an accident, it can't be something like cancer. If those things happen, then you'll have a benefit paid that would be associated with some body part or some loss of mobility or whatever it happens to be. The schedules for these tend to be fairly comprehensive, so you would see everything from the loss of maybe a thumb and finger, hand below the wrists, arm up to the elbow, arm up to the shoulder, both arms, and then maybe a loss of both legs. You'll see a schedule for each of those types of losses. It'll be a little bit morbid, a little bit depressing actually reading those schedules. So that's our AD&D benefit, and AD&D benefits tend to be fairly limited in dollar amount. You can have $25,000 or $50,000, but some employers, because AD&D benefits are so inexpensive, will actually seek very large AD&D benefits, hundreds of thousands of dollars in some cases. Something to watch with AD&D benefits is that, like individual AD&D, accidental death and dismemberment contracts do feature exclusions. And the exclusions we can see here would be for things like an accident that occurs while you're under the influence of drugs or alcohol. We can also see exclusions for commission of a crime. We can see exclusions for involvement in an accident where you're not a fare-paying passenger on a commercial aircraft. You'll see exclusions in here sometimes for war and terrorism or service in the armed forces. There's sometimes, although not all contracts have this, an exclusion for inhalation of poisonous gas. So there are a variety of exclusions that can be included in AD&D contracts. So the next type of benefit that we'll look at is our disability benefits. And disability benefits within group insurance contracts are broken up into two portions. The two portions are short-term disability, which is often called today weekly indemnity. Indemnity refers to restoring somebody to the position they were in before they suffered a loss. And we have the long-term disability portion of the plan. It's sometimes called this STD and LTD, although, like I said, weekly indemnity is becoming a more commonly accepted term. So the way this breaks down, roughly, let's say we have a plan member, a group plan member, and by the way, we don't have dependent disability. Typically, it's only the plan members themselves that are covered. So what happens here, we have somebody who suffers a disability. We're going to have a very short waiting period or elimination period. Usually with group insurance contracts, you'll see something like 1 day for sickness, 1 day for an accident, and 8 days in the event of sickness. And once you meet that elimination period or waiting period, now you can go on benefits. So your benefits would start and you would initially be collecting these short-term disability benefits, and then after a period of time, which can vary, but can be usually somewhere between 15 weeks to as long as 24 months. So after some passage of time, you'll roll on to long-term disability benefits. Now in this short term, the definition of disability, and this is where it might be useful to go back and review the disability module, to go back to module 9. In this short term, you're going to find that the definition of disability is kind of like an own occupation definition of disability. That is, we're going to pay benefits if you can't do your own occupation, although it really works more like a regular occupation definition where we're not going to pay you benefits if you can do some other job. So it's written like own occupation, but in translation it becomes more like like a regular occupation definition. Over here, you're typically going to see an any occupation definition of disability, which can be somewhat restrictive. This long-term portion of the plan is going to have a benefit period that is a maximum time for which you can collect benefits, and depending on the insurer and the employer, they will have negotiated out a benefit period of maybe 2 years or 5 years or out to age 65. Those are all fairly common benefit periods. Now, how much are you going to get? What's the benefit going to be? Well, keep in mind that disability benefits are normally paid tax-free. Now, we can jeopardize that. If an employer happens to be paying some of the premium, that's going to render the benefit taxable. But in most cases, disability benefits are going to be paid tax-free. In the short term, you'll normally find something like a 66 2/3% benefit. In the long term, you'll normally find something very similar. 66 2/3% is quite common. As with group life insurance, this will typically be up to a non-evidence maximum. So we have to watch here. You might have somebody who's making $100,000 a year, but their plan might have a non-evidence maximum of $3,000 a month. So if they become disabled and they haven't gone through the underwriting process to get insurance to carry them beyond the $3,000 a month, that person who was used to earning $100,000 a year, or about $8,000 a month, suddenly finds themselves only with $3,000 a month of disability benefits. It might not be enough. Now, keep in mind that $3,000 a month would be paid tax-free, assuming that the employee is paying for the disability portion of the plan. And a fairly common arrangement is to have the employer pay for the life and extended health care portions of the plan, while the employee pays for the disability portions of the plan. So when I talked about that 50-50 breakdown earlier, you might see that 50-50 breakdown where the employer's 50% includes extended health care and maybe life insurance, and the employee's 50% includes maybe the long-term disability, short-term disability portions of the plan. Premiums generally work out in such a way that that's quite viable. So there are some other technical details to know with group disability insurance. It might be useful to know about the employment insurance premium reduction program, in which if you have a good short-term disability plan, that is a short-term disability plan that will make it so that EI is not going to have to pay benefits, that the employer can actually have their EI their EI premiums reduced. If the employer chooses that, they have to share some of their savings with the employees. It's a fairly complicated provision, but it is one that you might be aware of. Okay, so now that we've looked at group disability insurance, and like I said, there's a little more technical detail here, but we've certainly looked at the broad overview. We're going to move on